Hello and welcome to the Banker's Tech Talk video series, keeping tabs on the developments in the fintech space. I'm Joy Macknight, Managing Editor at The Banker, and this week my guest is Neil Radley, CEO of Jaja Finance, a digital finance company. Neil, thanks so much for joining me today.
It's good to be with you.
So your whole aim is really to simplify the credit environment. What does that mean?
As we, and I mean the founders of the business and myself, have kind of looked at the whole credit environment, to us it does seem fairly complex as you think about a customer taking an overdraft, a repayment loan, credit card. If you want any of those products today, you have to make separate applications. You have to work out which of those sources of credit are the best for you according to the transaction. We want to step back and try and make it easier for the consumer, help them make the right choice of the type of credit that they want to take out. And the first product that we are tackling is the credit card itself. We launched the product at the end of last year, and over the next few months we will start to add in other ways of repaying your credit line, including repayment loans.
Okay, so can we talk a little bit about the functionality of the Jaja credit card? What kind of things are involved with that?
Yeah, I think for us it comes probably into four categories. It's security, control, convenience and value. Security, I think, is fairly self-evident. Customer transactions need to be secure. I mean, that's just at the forefront of everything that we do. Convenience, I think it's about making sure that we reflect the way that the consumer wants to interact in the modern society, and that's obviously following a kind of digital agenda. A lot of the new fintech companies are obviously focusing on the digital capability, and we're no different. We think we have a different edge, and therefore that's what we're kind of going to market with. On the control side, again, it's a bit like security. It's almost a hygiene factor. We want the customer to have full control and knowledge of what they're doing with their credit, and we're making sure that that capability is available on their mobile phone, which is what we're leading with. And of course, value. If I think about credit cards and what's been different over the last 20 years, we struggle to think about what has been different in the credit card space. The only thing that we feel people are competing on is 0% balance transfers. Is it 12 months, 24 months, 36 months? And for us, that's not really the way that you should be thinking about credit for the consumer. It should be what is affordable for the consumer. How can they eventually pay back debt? And you see that theme with the FCA, some of the pronouncements on persistent debt. So, in terms of how we see value, it's about making sure that the credit is affordable, that the messaging is very understandable for the consumer, and that ultimately we are able, through the digital application and the algorithms that we build in behind that we present the consumer with the options to be able to afford the debt and ultimately repay those amounts.
Okay, well, there's a lot of changes happening in Europe, especially around payments and credit cards and things like that, especially around open banking and the Payment Services Directive too. How will that impact your business, do you think?
I think we, like a number of players in the market, are still trying to work out exactly how it will help. It is a series of buzzwords at the moment, and how we translate the legislation into value for us as a business and ultimately for the consumer, genuinely, I think we are still working that through. I think if we consider it as an ability for the consumer to be able to better understand their options and to better understand how they can structure their personal finance situation, then it very much plays into our strengths and what we're trying to achieve. It's presenting the customer with an understanding of their credit position and how they can afford to structure their debt and ultimately repay it. So I think from that perspective, it will play very strongly into exactly what we're trying to achieve.
Okay. Thank you so much for your insights, Neil.
Thank you. Good to meet you.